Dr. Frayne Olson, and he's a crops economist and a marketing specialist at NDSU. And he's going to tell us his top secret grain marketing strategy, which isn't really top secret, but he's been a good sport with that title. So thank you, Frayne.
All right. Thank you, Angie. Thanks a lot, guys. I appreciate the invitation to speak today. I want to share my slides here so that we can get going. Let me do a quick reboot here and make sure everybody can see my slide. Is it up now? Can everybody see it, Angie?
Yes.
All right. So, yeah, Angie and I discussed a little bit about what the topic should be for this. And, the top secret marketing plan is, or strategy is, have a plan. And I think most of you realize that we're back in the world of price volatility. And there's several reasons for that. I'll try and cover here briefly. We got a lot of material to go over today, but I do want to start and emphasize we're now in an environment where you really do have to pay attention to what's happening. You do have to have a plan, and more importantly, have some price targets. Have some targets in mind saying at what point would you be willing to sell some more grain, either old crop or new crop. So I'm going to try and go through today are some background things. The most difficult part of putting a marketing plan together, which is usually the first step, is to try and set some expectations about what you think the future will bring. Given what we know today, what do we expect to happen in the future? Knowing that, or having some of that information, then we can start putting the plan together. And so what I'm really going to focus on is that first piece, the thing that everybody struggles with the most. Here's my contact information. Just as Andrew said earlier, if you have questions, don't hesitate to contact me, or you can talk to your extension educator or the extension agent here in North Dakota. So please feel free to follow up with any questions. With that, I'm going to just dive right in. Let's try that. Can you see?
Perfect.
Now? All right. Thank you, guys. Sorry for the confusion. So there's really three key things that are continuing right now to influence the market. There's a lot of stuff happening, but these are really the big three. Chinese purchases. The feed demand coming out of China has been much stronger than we had expected. And that's both for corn as well as soybeans. Okay, and I get a lot of questions. Well, what about the phase one agreement? How much of an impact is that having? It is having an impact, but primarily through removing the hurdles or the barriers for trade. And a lot of that was negotiated earlier. We have those purchasing targets in place as part of the phase one agreement. That's important, but we're really falling short. We're falling short of the targets that were put forward. The purchases by China are well above the 2017 benchmark, but really below those targets that had in place. So it is having an impact, but really this is market forces now that are playing the key role. We've been watching South American weather for a while, as well as the growing conditions. I'll give you a brief update on that. One of the reasons, in my view, one of the main reasons that we saw the pullback late last week and a little bit of a recovery now is not only the weather, there's some rain showers now finally coming through, in particular southern Brazil and Argentina, but also these managed hedge funds. We got a lot of speculative activity right now. They have some very large, long positions, which means they have bought over time. And when they see a price break, they're going to start selling off those positions to try and take advantage of that and actually lock in some of their profit margins. So I do expect as we move forward, we're going to see a lot more price volatility, especially as we get into harvest months for South America and we start getting into some planting intentions in North America. The four key USDA reports we recently received did obviously hit the reset button. It reset the expectations as we move forward in time. So I'm going to recap a few of the key numbers that we got and what that means for prices into the future. All right. I don't want to spend a lot of time on corn, but we do have to talk about it because right now the linkage between what's happening in the corn market and the wheat market is getting stronger. And I'll try and explain that in very quickly here. As we start to get our ending stocks pulled down and prices for corn start to become higher and more variable, now all of a sudden the wheat supply chain becomes an alternative feed source. When corn prices are low, the wheat market and the corn market kind of act independently. But as corn prices go higher and wheat prices do not respond, if corn prices go higher and wheat doesn't follow, then all of a sudden the feeding industry starts looking at corn as wheat as an alternative feed source. So the big surprise that came out of the USDA reports was the drop in forecasted yield, the yield that we had from last year's crop. We were expecting some lower numbers, but it was lower than what the market and traders had really thought was going to happen. As a result, I want to drop down to the bottom line, far right-hand corner, bottom corner of this graphic, and look at our ending stocks. As you can see, the volume, the bushels that we're going to have in the supply chain moving forward is starting to drop, starting to get tighter. Now, these are for corn, these are not exceptionally tight levels, but they're getting to the point where the market's getting a little bit nervous. So to put this in graphical form, I want you to focus on the blue bars on the bottom. That's our stocks to use ratio. It's scaled on the right-hand side. That stocks to use ratio, think about it as how much of our ending stocks, how much are we going to have in reserve just before harvest, divided by our total needs. So think about it as a margin for error. Okay, and as you can see, our margin for error, our cushion, is starting to drop. So what we're trying to forecast here is, or project is, how much grain are we going to have in the bin just before harvest relative to our use? The red bar is really what I want you to focus on. As that ending stocks number starts to get smaller, two things happen. Number one, average prices increase, but we also start to see more price volatility. Prices become more variable. So if we look at corn, I've always said that about that 10% carryover stocks is kind of the tipping point. If we have carryover stocks above that, prices tend to be lower and a bit more stable. If we get under 10%, now all of a sudden the market gets very nervous. And if we look back in time, if you look at that 2011-12 time period or the 12-13 time period, when we had relatively tight corn supplies, you remember back, those were much higher corn prices, but a lot of price volatility. So the corn market is now getting a little bit nervous given our supplies. And the main driving force behind that has been this increase in exports. So if you look at the three big uses for corn, the blue line on top is feed, the red bar is ethanol, and then the black bar on the bottom is the export pace. The dotted lines on the far right-hand side are the current USDA forecasts. So we are looking for a slight reduction in that feed and residual number, and a lot of that is because of the residual. We don't have as much spoilage and wastage in the system because we have fewer stocks or fewer supplies available. The concern to me is not just necessarily the feed number, but more importantly, the ethanol number. Ethanol has traditionally been a very large user of corn. We've seen some contraction. We've seen a reduction in the amount of corn going into the ethanol sector. The USDA forecast right now is for that lower levels to continue. Now, fortunately, we've had an increase or a rebound in our export pace, and that's more than offset the reduction we've seen in ethanol. So let me talk about ethanol a little bit more specifically. These are weekly weekly ethanol consumption numbers. So how much ethanol is being produced every week, and then we can back calculate and say, well, how much corn is being consumed in the ethanol sector as a result of that. Notice the very rapid drop we saw in early 2020. Of course, that was because of the economic shutdown. We've seen a recovery, a rebound in ethanol production, but the production levels we're seeing today are much lower than we saw before COVID became part of our US economy. And a lot of that is because we're just driving fewer miles, we're using or consuming less ethanol. Now, as corn prices have come up, the ethanol sector and the margins have been squeezed very tight. So far, the ethanol futures market has been able to keep pace with the corn futures market with the increases we've seen, but there's limits to how high that can go relative to gasoline. So we've got to be a little bit careful on the corn side that as corn prices go higher, that the ethanol consumption may drop. And again, because of the squeezed ethanol profitability. If we look specifically at exports, and this is a table of how much corn do we export to different countries, all of the numbers on the table, except for the column on the far right-hand side, are 12 months totals. The column on the far right-hand side is basically year-to-date, from the beginning of the marketing year in September 1 through about the middle of January. And I just want to point out, traditionally, historically, Mexico and Japan have been our big export destinations. And if you look at their current export pace, their current purchasing, very similar to what we've seen in the previous years, which is a good thing. I was a little bit concerned that because of COVID, Mexico in particular might reduce some of their corn imports from the United States. So far, that has not happened. The surprise to the market has really been the Chinese purchases. If you look in the highlighted on the far right-hand side under China, almost 11.8 million metric ton. That's more than double the previous record of corn purchases. So this has really been the surprise. This is driven primarily by the expansion of their feeding demand in China, in the rebuilding of the pork industry. So this has really been the surprise. And we did expect Chinese purchases, but not to these levels. When we look at our export shipments, again, what's the pace of exports? They're pretty much right on pace with what we've seen to date. Now, this is really going to have an impact as we move forward in time on local basis levels. Okay, so the pace of exports, how quickly do we need to push these corn supplies through the export system, is having an impact then on basis levels. And we can talk about that if you have some more specific questions. When we turning back to the kind of the global market, the U.S. is usually the largest exporter of corn, closely followed by both Brazil and Argentina. So when we talk about South America and South American weather, we usually think soybeans, but we also have to think about what the impact is going to be on corn and corn supplies. Now, I'll talk a little bit more about what's happening in the weather market shortly, but I want to emphasize that what happens with weather in Brazil and Argentina also impact the corn market. Now, the newcomer in the global corn export world has really been Ukraine, and we do have to keep an eye on what's happening also then in kind of that Black Sea region, the Baltic region, because Ukraine is also a significant exporter. So let me shift into soybeans really quickly. I'll go through kind of the same process. I want to focus on the column on the far right-hand side. We want to drop down to the bottom row at that ending stocks number, because this is the number that the market is watching very, very closely, especially for soybeans. Notice that our ending stocks have been dropping over time. Now, the red 140 million bushels is a current USDA forecast. It's a forecasted number, just like it was for corn. But if we have the current forecast for, in particular, crushing and exports, that number, that ending stocks number, is a very, very tight supply conditions. If we look at it graphically, again, those blue bars on the bottom, scaled on the right-hand side, is that stocks to use ratio that I talked about. Notice the red bar on the far right-hand side. That's a very, very low number. It's not historically low on a percentage basis. Actually, 2012, 2013 was the historic low, but it's very, very close to those levels. So our margin for error in the soybean market is very, very tight, which means, again, higher prices, but a lot of volatility. Look at the two big uses. Number one has traditionally been crushing, the blue line. But again, exports is always the wild card. That's the thing that we're always most difficult to forecast and project. The dotted lines on the far right-hand side are the current USDA numbers. And the question we have is, given the current export pace, is that going to be, is the USDA number relatively close, or is it a little too high or a little too low? So right now, there's really this competition going on between the domestic crushing industry and the export market. Now, everybody remembers what happened with the trade war between the United States and China. We saw a pretty rapid, dramatic cutback in our exports globally. A lot of people are looking at possibly selling our soybeans into other markets. Unfortunately, that didn't happen. China is such a dominant buyer of soybeans in the global market that they really become the driving force behind it. So yes, we do export some whole soybeans into the European market, which is this, it's again the second row. We also export some into Mexico, but even during that 2018-19 time period, which is the peak of our trade war, China was still our largest country, our largest export destination. The real question we had, and this is the unanswered question we had, was once we had that phase one agreement, China came back into the global market, had the ability to buy US soybeans. How much of a rebound or recovery were we really going to see? And this recovery, the amount of beans that the Chinese have bought from us has again exceeded everybody's expectations. I was not expecting personally to see this level of rebound. I was expecting to see an increase, but I didn't think it would be as large. This is also a lot of the other private analysts and traders are seeing the same thing. So if we compare our export pace, this far right-hand side, which is from September 1 through the middle of January, again, this is now export commitments. So this is both the level of soybeans that we've already shipped, as well as those contracts for delivery as we move into the rest of this spring season. But if you look at the total amounts at 34.4 million metric ton, that's nearly a record pace for what we saw back here in 2016-17, which was our record number. If we drop down to the bottom, now not only has China been buying, but our traditional other customers have also been buying at a regular pace. The Europeans, the Mexicans, the Egyptians, the Japanese. So our total exports accumulated today, both actually delivered, but also those contracts for delivery into these rest of the winter and spring months, is much faster than we had expected. So again, it looks like we may have either record pace or near record pace for our soybean export levels. When we look at the timing of this, and one of the things I've talked about for many years now is that we have a very seasonal export pattern. Now, these are export shipments. Again, this is the amount that's actually been delivered. Notice that seasonal behavior. Also notice the red line, which is where we are today, relative to the green line, which is our 2016-17 record levels. So we're seeing some very aggressive sales. We're seeing some very aggressive shipments. And that's been reflected, obviously, not only in the futures market prices, but also in the basis levels we saw, especially at harvest. When we look specifically at China, not a big surprise, China has re-entered the marketplace. Their buying habits, the pace of buying and shipments is very similar to what we saw before the trade war occurred. So this is something that again, we're watching very closely. We know at some point China is going to switch their purchasing to the South American crop. The question we have is, when will that happen? And a lot of that now with Brazil starting their soybean harvest, I do expect that some of those shipments will start to take place, and that obviously the Chinese buying will switch to South America instead of the North American supplies out of the US. When we look at total commitments, how much has China bought from us on a seasonal basis? This is cumulative numbers. So every time we have a sale, we add it to the pile. They're actually ahead of the pace that we saw in that 2016-17 timeframe. So again, we're not beating it by much, but it's above the levels that we saw at our record pace back then. So again, a very surprising. I was expecting recovery, but not to these large export levels. Who exports soybeans? It really comes down to two countries for whole soybean exports, Brazil being the largest, and then the United States. Now, Brazil does produce in total bushels more soybeans than the United States, but the US also has a larger domestic crushing industry than Brazil. So Brazil is a bit more dependent upon whole soybean exports. Argentina produces a lot of soybeans, but most of the soybean exports are processed. They export oil and meal. So they do export some whole beans, but the majority of their exports is in processed products. So we have to keep that in mind as well. I've had a lot of questions about what's going on with the size of the soybean crop in Brazil. And these are the pre-report industry estimates. So these are the industry forecasts that came out just before the USDA WASDE report. So I'm looking in that far right-hand column under Brazil and under soybeans. Notice that the average trade estimate was about 131 million metric ton with a range of 128 to 133. There was recently a resurvey of some of these private analysts, given new information and the rainfall that's recently occurred. And the low end of the trade estimate was about the same. It stayed at about 128, but the high end actually increased. So right now there is a forecasting firm, a private company, forecasting at about 135 million metric ton. USDA is about 133. Last year, Brazil had a record soybean production at 126. So the big increase is primarily driven by increased plantings or increased acreage. The question mark that we have to fill in yet is, what are the yields going to be? The yield forecast, the yield expectations are now starting to kind of recover. So a trend line yield puts us at about a 133 for total production. So right now, most of the industry is thinking on average across Brazil as a total country, we're going to have kind of average yields as we move into harvest. So we'll have to wait to see again how the reports come out and what is exactly happening. Just a refresher really quick on geography. Mato Grosso, which is that northern growing region, very large state, very large producing region, they're just now starting their harvest process. So we're getting some early reports out of the yields. The early reports have been a little bit disappointing, but the expectation is we start moving south that those yield numbers are going to start to grow. They're going to start to climb. So the northern crops, even right now, if they were to get some additional rain, probably not going to impact yields any because they're harvesting. But this southern growing region, these southern areas, which also have very large acreages, account for a pretty large percentage of total production, they're now in that kind of pod filling stage. And it's this southern region and into Argentina. So here's southern Brazil, here's Argentina, that we're really looking at for rainfall and precipitation coming through and the impact it might have on this yield. So the rains that are now forecast to be coming through are kind of putting a higher top end. They're putting a few more bushels onto those growing regions. And that's really what the market is responding to. So we got to understand the difference in production and harvest between the northern and southern Brazil. When we look at Argentina, again, here's southern Brazil over on the right-hand side. Here's the core growing region in Brazil. Again, these are in kind of late flowering, early pod set, and some pod filling going on. So rain showers at this time will definitely help boost some yield and yield potential. And that's exactly what the extended forecast is looking for. So this is a precipitation forecast for not only southern Brazil, but also for Argentina. For the end of January now into the first couple days of February. So the forecast is for average to slightly above average rainfall, which again now will help put some additional bushels on to that southern Brazil as well as Argentina crop. And again, this is what's resetting the expectations. Looks like Brazil as well as Argentina will have a little bit better crop than we first expected. Shifting to wheat, a little bit different story in wheat. Even though our ending stocks number, if we look at the bottom right-hand corner, our ending stocks is forecasted to come down a bit, but we still have very adequate supplies of wheat. Now, this is all wheat blended together. So it's all classes of wheat. When we look at it on a percentage basis, we still have very comfortable supplies of wheat. Even though our ending stocks are starting to come down, they're not to those levels where the market's getting really, really nervous yet. Okay, if we look at how do we use up wheat, the blue line is domestic milling, again, tends to be very stable. The domestic milling market's very important to the wheat market, but the uncertainty and the unknowns really lie within that export pace. So we spend a lot of time talking about exports. I do want to drop down to the black line a little bit because that black line for feed usage is that connection into that corn market. So as corn prices go up, if wheat prices don't follow, they don't get pulled along with that, all of a sudden we take some of our higher quality milling wheats and they end up going into the feed channels. And we want to prevent that, especially if you're a wheat miller in the US or an international buyer of US wheats. When we look at export pace for wheat, again, all of the numbers on this table are yearly totals, except for the column on the far right-hand side, which is from June 1, again, through the middle of January. So our big customers, the big buyers of US wheat, Mexico, Philippines, Japan, they're buying pretty much at a regular pace. They're buying at a rate and of volumes that we would typically see. Once again, I hate to sound like a broken record, but the surprise to the market has been this Chinese exports. Now, that's not a record level. The 2.4 million metric ton is not a record level, but it's much higher than we've seen in many, many years. Most of the wheat we're shipping into the Chinese market is hard red winter wheat. It's not a spring wheat. China has bought spring wheat from us in the past. They're dabbling a little bit right now and buying some shipments, but it's not a large, fast, aggressive pace. So so far, most of the export shipments and export sales to China have been the hard red winter wheat varieties. We look at export pace, kind of how quickly are making the shipments and deliveries on our U.S. wheat commitments, pretty much right on pace with what we would see this time of year. I think the expectation right now is that red line will continue to follow something along the green line as we get into the export shipments. Again, the pace of shipments influences these basis levels. I do want to make a real quick comment about what's happening globally. Right now, for the last several years, Russia has been the largest wheat exporter in the world. It used to be the United States, but it's now Russia. Russia, again, exports a wheat class or wheat quality similar to our hard red winter wheat. They don't export a lot of what we would consider hard red spring wheat. Their neighbors in the Ukraine also, again, shipping something, selling something similar to a hard red winter wheat. So it's really that Black Sea region right now that's the driver in the hard red winter wheat market, which of course then spills over into spring wheat pricing. So we are still a major player as United States in the global wheat market, but we aren't the dominant player we used to be. So if we look at hard red spring wheat specifically, I want to narrow down a little bit in spring wheat. We look at carryover stocks in spring wheat in the US, very comfortable. We're not short of spring wheat. We had a good crop last year. We've got good qualities this year. When you look at what's happened on the Canadian side of the line, again, a very good crop of spring wheat in Canada. The quality profile is very good, very adequate. So even though we're starting to see some rally and responses in the spring wheat market, it's primarily been driven by the price volatility we're seeing in the corn market. Now, will that change as we move forward? I do think it will start to change, especially as we get into this discussion or this debate about how many acres do we plant in 2021. We look at export pace for spring wheat specifically. Philippines, our #1 customer. Japan being #2, very, very important, but the volumes are not as large. They tend to be a really nice, stable buyer from us. The Philippines has really gained dominance as our spring wheat export destination. Yes, China has bought some US spring wheat, but again, the volumes are relatively small. They really haven't been coming in and buying aggressively from US spring wheat yet. I do think my personal belief, my gut is telling me, I do think China will come in and buy some US spring wheat, but likely will not take place for another few weeks. Probably after, my best guess right now, sometime after their Chinese New Year, which ends in about the middle of February. When we look at export shipments, kind of how quickly are we pushing the soybeans, or excuse me, the wheat, spring wheat through the system, pretty much right on pace with what we would normally see. So with that, I did rush through this, I realized, but I wanted to allow some time for questions and be able to also allow some time for Daryl Richardson to be able to do his discussion. So I'm going to stop sharing for right now and see if there's any questions that have come in.
Well, thank you, Frayne. Another great presentation, and I know everyone looks forward to it every time you present. So we do have some questions here that have popped up in the Q&A.
Okay.
The first one is, with price volatility and the higher price of soybeans, do you think that will eventually have a negative effect on exports? And then kind of to go with that, what about the exchange rate?
Okay, so excellent questions. So let me do exchange rate first, because that's the simplest one. We have seen the value of the US dollar start to soften. So they're not, again, at low levels, but they're lower than they have been for quite a few years. So that exchange rate, the US dollar relative to some of our trading partners, is starting to soften, which obviously makes it a lot easier for us to be able to supply the global marketplace. Coming back to the soybean question specifically, I want to be really clear, and I can't beat this hard enough, that we have to think about old crop and new crop in two different veins. So what's happening in old crop corn, old crop soybeans, and now old crop wheat is very different from the dynamics in the new crop market. So when we start thinking about trying to make some pre-sales, some pre-harvest sales of corn, soybeans, or wheat, we got to think about that market very differently. So the old crop soybeans specifically, yes, the higher prices right now are trying to ration use. We've had some very strong export demand. We've had very strong domestic demand. The reason prices are going higher is they're trying to ration this use. We never fully run out of soybeans. We're not going to run out of beans. The question is, how high do prices have to go to be able to ration that use so we have some reserves and some carryover going into the 2020 cropping year? And that's really what's happening right now. So the market is really struggling. That's why we're seeing the volatility, is we're really trying to struggle to say, well, at what levels do we start to ration that use, in particular the export use?
All right. Sticking with soybeans, given there looks to be another strike planned in Brazil, specifically the truck drivers, I believe, do you think that could spark another rally in soybeans or have any effect?
Possibly. The real question is, how long will that strike last? As I said before, the soybeans are finally now beginning to be harvested. They had some delayed planting because of some really dry weather this last spring, so the harvest has been delayed. But in order to meet those shipping commitments, those sales that have already been booked, the ships or the vessels are going to be arriving in port pretty quickly. Obviously, has to get from the field into those port facilities, and that usually happens by truck. In Brazil, especially in that Mato Grosso, the soybeans in the Mato Grosso region are primarily delivered by truck. So the real question in my mind is, how long will that strike last? If it lasts for just a few days or even a week, that's probably not enough time to really start putting pressure on deliveries. But if that were to go on for an extended period of time, let's say a couple of weeks, yes, then I think it would put some pressure. There might be some some importers that become very, very nervous and say, okay, we need to look for some alternative supplies to be able to backfill because of the delayed deliveries.
Okay. Another soybean question. So you mentioned obviously the soybean stocks in the US getting very tight. The situation was tighter during the 2012-13 season.
Mm-hmm.
Do you recall what the price was, how high we got? Would we see something similar?
Well, if you give me just a second, I can get you that number. I'm just pulling some stuff up really, really quickly. We got, the peak was just, well, and this is the peak now, guys. So I'm not saying we're going to get there, but the peak was just under $18 a bushel. But again, that only lasted for a very, very, very short time period. Most of the time during that time frame, we had prices anywhere from $13 to $15 a bushel. So that was kind of the price range we had during that 2012, 2013 time period when we had those very, very tight supplies. That was on the futures market, guys. That was on the futures market, not cash.
All right, we'll switch gears a little bit. Looking at price ratios between corn and wheat, and I would even add soybean into that.
Yep.
How much do you expect to see acres of spring wheat drop this year in the Dakotas? And do you see something similar happening in Canada as well?
Okay, so I'll start with the Canada one first because that's a little simpler to answer. Yes, the soybeans have extended into Canada, but it's really been into Manitoba. Saskatchewan doesn't grow a lot of soybeans. So most of the soybeans we see in the Canadian production has been straight north of kind of the Red River Valley. And it's relatively small acreages compared to even what we see in North Dakota itself specifically. So there will likely be some shifting going on in Manitoba, but again, on the margin, it's going to be pretty small. In North Dakota, because a lot of the spring wheat is produced in Saskatchewan, I guess is kind of the moral of the story. Manitoba is important, but Saskatchewan is the big spring wheat and Durham region. Coming to North Dakota, yes, I do expect to see some shifting of acres. And I don't know right now really what to expect yet. Because I know that the futures market for spring wheat, the Minneapolis contracts, are watching what's going on in November soybeans very closely. We can afford to have a little bit of slippage. We can afford to see a little bit of slippage in spring wheat production, but we can't afford to see much. We got some carryover stocks from last year, yes. Canadians have some spring wheat carryover as well, so we're not terribly worried, but we can't afford to have a big shifting going on. I do expect to see some retracement. I don't think the spring wheat acres are going to be what we saw last year. But what that shift is going to look like, I think it's a little bit too early to really put a number out there. I wish I could. It's just too early right now.
Thank you, Frayne. And of course, as we know, when the prospective plantings report comes out, that obviously is more reactive than anything and could change producer minds
Absolutely,
based on
yep.
that. And then I guess this kind of goes along with that, is obviously we're seeing a good chunk of the country in a drought situation, or at least classify it as a drought. You know, how do you think that could change planting decisions this spring?
Okay, and I want to target specifically, if you get into, let's say, you know, a Nebraska, or because Nebraska's in that really dry zone. We've got a little bit of southern Minnesota. We actually have parts of western Iowa in some pretty, you know, pretty tough drought conditions right now. I don't see the traditional Corn Belt making a lot of flipping of acres. I think that's going to be much more on rotations and kind of price relationships. But if we move into South Dakota, and more importantly into North Dakota, I do think there's some folks that are going to be really struggling with, given the dry soil moisture conditions and the fact that corn is a much heavier user of water. You know, what does that mean for yield and yield expectations? As we get into southern North Dakota, southeast North Dakota, I do think corn still wins, and farmers are willing to take that risk on making sure that we have the risk on rainfalls coming at the right time. But as we get into kind of central and western North Dakota, where those transition acres of corn might occur, that's going to be a lot tougher call. Do you put wheat in knowing that it's a lower water use than corn and probably a more stable yield? Is there enough price relationships to be able to justify putting corn in with a higher risk or higher volatility of yield and yield potential, even though that the profitability on an average crop might look better for corn? And that's why I'm struggling a little bit right now to think about and to try and make some predictions on what kind of acreage shifts we might see. I do think it's a little bit too early to tell.
All right, thank you, Frayne.